And now we cross to Hong Kong for the latest from our Asia business correspondent, Joe Flynn. Hi, Joe. So let's start with more detail on what's been happening in Asian markets at the end of the week there. What's the latest?
Good morning to you, Idia. It's been a pretty decent end, frankly, to the stock market here in Asia after what has been a pretty busy week, really, certainly with all the stuff that's been going on at China's annual meeting of Parliament. Today, investors seem pretty encouraged on most risk fronts. Signs of progress in these trade talks between the United States and China helped augment positive mentality from the growth support pledges that we heard from Premier Li Keqiang as the MPC closed, as you just mentioned there. The Shanghai Composite today closed 1% higher. It was up 1.7% for the week. Blue chips had an even better day and 5-day period, though. There were signals that tax cuts and monetary conditions will be brought in to help boost the economy in China. But there was also indicators of some economic stress as well, which did keep gains more or less in check for the day. That also weighed heavily on sentiment offshore. The Hang Seng Index rising a more modest 0.6% for the day, but up almost 3% for a very good week here in Hong Kong. In Japan as well, the Nikkei ended higher as well. Most investors in Tokyo certainly eyeing the changes being made in China. That helped buoy sentiment, and China-exposed equities there did soar as well. There was fairly muted impact, I should say, from the Bank of Japan's decision to keep monetary policy steady. Stocks, nonetheless, up about 0.8% for the day, 2% rather, for the week. Elsewhere in the region, stocks in South Korea were up a more muted level. Investors there really shrugging off signs of possible growing risk after North Korea said it was considering suspending nuclear talks with the United States. In Southeast Asia, the pick of the bunch was Indonesian shares, which jumped after the country posted a surprise trade surplus in February. Most other regional indices up pretty strongly as well. Australian equities, though, were the ones to buck the regional trend. The ASX down under, ending the session lower for the session and for the week.
Well, Joe, China's premier gave closing remarks to the annual meeting of Parliament today. Now, a lot of interest clearly in what the plan was for economic support measures. What did we learn?
Well, Premier Li Keqiang said that China could use reserve requirements to boost growth. That was broadly seen as a positive step, certainly, as I said, by investors in the region. It did have broader promises, though, for support measures designed at, as I said, helping to bolster the slowing Chinese economy. It does suggest, really, that policymakers are preparing to be more forceful with stimulus measures than they have been so far. China has already promised billions of dollars in tax cuts and infrastructure spending, but not all of that has come through into the real economy yet. That is one reason, for instance, why you're still seeing data that's showing growth continuing to slow there. Premier Li did, however, warn against any flood-like stimulus. Clearly, there are concerns as well about turning on these support taps too much. That was actually a criticism that has made of the previous officials in charge of China's economy. The response that they made to the financial crisis in 2008, it's argued, perhaps laden the country too heavily with debts that they are still trying to pay off. Clearly, the trade war is still a big hurdle. We know that investors in China are still concerned about that, but it may really help the effectiveness of any stimulus measures if they can get closer towards some sort of trade deal, which it does look like is happening as far as the comments we're getting out of the US side seem to be concerned. But regardless, analysts reckon this could perhaps be the start of a big boost for China's economy and perhaps indeed for stocks, not just in China, but right across the region as well.
Well, one area where Beijing may be particularly worried, Joel, is the housing market. Why exactly is that?
Well, we had data this morning, Idia, during Li's speech, in fact, which showed that new home prices in China grew at their slowest rate in 10 months. Average new home prices were up just 0.5% in February in China's 70 major cities. The problem with housing is that authorities have to walk this tightrope between loosening some existing curbs and flushing out speculators from the market who are driving prices too high. Now, confidence is slipping in China, in particular over the property sector, but nonetheless, the cost of housing is still rising apace. It's up more than 10% in the 12 months to the beginning of March, and analysts say That is still a fairly healthy signal for the housing market. And while the slowdown, of course, is concerning, it's not yet a cause for alarm. The problem, of course, is that China's housing market is a really crucial component of overall growth. And particularly for consumers in the country, real estate directly influences something like 40 other business sectors in China. And so it's really key to trying to temper this economic slowdown. So trying to walk that tightrope as far as policymakers are concerned will be key to the whole country. And certainly this is going to be a particularly important sector to look at as we see these stimulus measures that Li Keqiang mentioned coming into focus.
Well, Joel, we know Japan is struggling with inflation at the moment, but it sounds like the problems there seem to be piling up. What more should we know?
Well, the Bank of Japan, as I said a moment ago, has just held its two-day review over its broader monetary policy, specifically interest rates. It's decided to keep in these ultra-loose monetary conditions, standing pat, though, rather than expanding or turning dovish. There had been speculation the BOJ was going to ease the conditions even more, particularly in the face of a series of risks. Last week, we know the European Central Bank turned towards a more dovish stance. And there was plenty of things really for Tokyo's central bank to worry about. So it's an intriguing sign that it hasn't done anything. The BOJ governor, Haruhiko Kuroda, did warn that while he was optimistic about the prospects for growth, there are risks on the horizon. Robust exports and factory output that we've had in Japan that have gone some way to helping eke out growth so far cannot go on to continue to do so forever. He has clearly worried about demand in the country. That has been hit by the trade war. Slowing global growth, of course, is hurting countries around the world. Japan is no different. There is also the uncertainty from things like Brexit as well to cloud the outlook for sentiment in particular. Now, the Bank of Japan really said that the next 3 months are going to be critical in trying to evaluate that. One of the problems, really, that as far as the Bank of Japan is concerned, is that while it's kept these ultra-loose monetary conditions in negative interest rates, for instance, it doesn't have an awful lot of room to turn those taps on even more. And some people are worried. We heard the an Indian central banker yesterday, for instance, warning that not all central banks have the ammunition to really try and bolster economies going forward if things do turn further south. Now, according to some Reuters sources, there are some in the BOJ that do expect the Japanese economy to continue to strengthen. They expect it to emerge from a relatively soft period that it's going through later this year. And that's when this stimulus from China could potentially kick in, and that would help perhaps underpin the global economy. And that seems to be what the BOJ is looking towards at the moment. That also gives you an idea, I think, about how important some of these policy decisions that are being made in China are to others around the world, and the ramifications that they could have, not just to the stock markets in Asia and beyond, but also to the policy-making decisions that are being made in countries like Japan.
Well, Joel, before I let you go, in corporate news, Swiss bank UBS is in the headlines in Hong Kong for the wrong reasons. What more can you tell us about this?
Yeah, Hong Kong's securities regulator has, in the last 24 hours, suspended the license for UBS to lead IPOs here. That means it can't sponsor IPOs or act as the lead negotiator for them. It comes alongside about $100 million worth of fines for the Swiss bank and some other rivals as well, the likes of Morgan Stanley, Merrill Lynch and Standard Chartered, all brought in to be penalised by Hong Kong's regulator, the Securities and Futures Commission. They relate these penalties fundamentally to some failures over due diligence by these banks on a series of IPOs over the last 10 years. One of those was a company called China Forestry. It raised over $200 million back in 2009 when it debuted on Hong Kong's stock market. But it was subsequently liquidated, the company that is, after auditors found problems at it. And now it looks like the regulator, the SFC here, says that a lot of the blame for investors getting hurt in the process of that liquidation is because UBS and others didn't do their due diligence properly. Now, the action itself is the strongest ever taken by the SFC over listing standards. It shows that it is willing to protect investors here, which some had actually questioned, particularly after the introduction last year of so-called dual-class shares. They will be comforting, certainly, to the stock exchange. It will be comforting to Hong Kong in general, because competition for IPOs is really hotting up, particularly in Asia, as bourses try to compete with one another to try and convince companies, particularly Chinese tech companies, to come and list. And there is some sense from analysts that this latest measure from Hong Kong's stock market regulator could actually help assuage any fears that investors and companies have about listing here.
Well, Joel, many thanks for those updates and for joining us this morning on the show. Arise Asia Business correspondent there, Joel Flynn.